If you're the kind of person that likes having investments that pay out cold, hard cash each and every month, then this is the video for you. Because I plan to go over the top 5 dividend ETF or exchange traded funds that pay a monthly dividend. And if you're familiar with the channel, then you already know that I have a spreadsheet down in the description below with these ETF and a few more so you can research them on your own. And if you like dividend paying investments, then I'm guessing that you fall into 2 main camps of investors. The first being that you want a solid investment that pays out cash on regular intervals to subsidize your living expenses. And the second group is one that sees the potential from reinvesting those dividends to have growth during the good and the bad times. And if you happen to be in a completely different group altogether, then please share in the comments below. But before I review the top ETF, I have a little bit of a quiz for you. If you were given 2 ETF that paid a monthly dividend, which one would give you the higher total return in 1 year? The first ETF has a total return of 9%, and it has a dividend yield of 3%. And the second ETF has a total return of 6%, but it has a whopping dividend yield of 11%. So which one gives you a better return on your money at the end of the year? And it's not meant to be a trick question because I literally give the answer away, and it happens to be the first ETF with a total return of 9%. And some people will instantly argue that I didn't take into account the dividend yield. They may argue that the second ETF has a total return of 6%, but when you add the 11% yield, it blows the first one out of the water. And if that's your first instinct, then you may have fallen victim to my dividend ETF trap. You see, whenever you research dividend paying investments, the total return assumes that the dividend has already been reinvested and it's in the compounding growth, and the expenses have also been taken out. And that's why I'm going to be showing you the compounded annual growth rate for today's ETF in 3 different levels. And the first is that I'll be sharing it at the pricing return, which is what the ETF was trading at. Then there's the dividend return, and then there's also the total return. I simply want all of you to understand what you are truly investing in with regards to dividend paying ETF or stock. And for that reason, if dividend investments are your main objective, then they require a little bit more research than most any other stocks or funds. So please research your investments to fully understand the true value. I'll get started with the first ETF with a monthly dividend of JP Morgan NASDAQ Equity Premium Income with the symbol JEPQ. And I'll state that this fund is relatively new and it has a limited amount of history. But it does only have US large cap companies from the NASDAQ 100 index. But the fund also invests up to 20% in the equity-linked notes from banks and brokers to provide some of that extra cash flow. And when you look at the holdings, this ETF is wildly different from the other dividend ETF because it does have so many top high-growth companies like Microsoft, Apple, Alphabet, Nvidia, and Meta. This ETF is the perfect blend of growth and dividends, which we can see when we look at the trailing 12-month mark. And as I mentioned, it is young and it doesn't have anything beyond the 1-year mark. Now, when you look at the price CAGR or compounded annual growth rate, it is healthy and growing, which shows in the total return compounding annual growth rate. But this is the only fund today that outperformed the S&P 500 at the trailing 12-month mark. Now, I need to take a moment and discuss the dividend CAGR. It isn't one where you add it to the price CAGR and then it gives you the total return. That isn't how it works. To help illustrate this, when we look at the dividend CAGR for the trailing 12 months, it's at 29%. That is the growth specific to the dividend dollar amount per share. When we look at the dividend payout by month, you can see that it's at $3.85 for December 2022, and it moved up to $5 in December 2023, which is the 29.9% growth that we see matching in both charts. And when we look at the other attributes, the expense ratio is in the middle of the pack at 0.35%. But the annual dividend yield is quite healthy at 9.66%. As I mentioned, this is sort of the perfect fund in the middle where it has a really good dividend yield and it is also a growth ETF. The downside is that it's such a young fund that it doesn't have a whole lot of history. And as a reminder, if you earn a dividend from a taxed account, then you do need to pay taxes in the year that it's earned. And if you don't stay on top of it, you may be one of those people that looks at their tax paperwork at the end of the year and thinks to themselves, holy, Schitt's Creek is a great show. You know what else is great? Supporting the channel by giving me a thumbs up. But if you want updates and news as it happens, I also have a free newsletter that you can sign up for down in the description. Now I'll move on to the next dividend ETF of SPDR Dow Jones Industrial Average ETF Trust with the symbol DIA, where it invests in 30 blue chip companies. And we'll get straight into the top 10 holdings of this ETF, where they're all high quality companies across technology, financial services, and healthcare. This happens to be a broad fund with great companies supporting it. And when you look at the performance of the TTM, or trailing 12 months, 3-year and 5-year CAGRs, they're all doing very well, but they don't quite keep up with the S&P 500. And when you look at the beta of a 0.81, it means that it is less volatile than the overall market. And that's what I would expect from a healthy dividend investment. So that makes it a good play to weather the ups and the downs from the pullbacks and the recessions. The monthly dividend rate is one of the lowest, but the expense ratio is definitely the lowest of the group at 0.16%. This is a solid ETF with a good historical performance, but it does not provide a very high dividend if that is one of your goals. It's a two schools of thought kind of thing, but our principles stay the same regardless. Avoid volatility and find growth by diversifying the smart way, where our sponsor at Masterworks have perfected managing one of the best uncorrelated assets of fine art. You don't need to understand the art's message to understand its value as an asset. But Masterworks' research team can teach you both. They've combed through over 50 years of art auction records, building a one-of-a-kind database, which is how they've pulled in returns greater than 14, 17, or even 21%. Over 900,000 people are on board. And while past results aren't indicative of future performance, they've got over 300 offerings and each of their sales so far have returned a profit. Shares from their more popular offerings have sold out within minutes. But since my viewers have responded so well, you can still skip the waitlist and get started today by using the affiliate link in the description. As with any investment, past performance is not indicative of future returns. Investing always involves risk. Now I'll cover the next fund called Amplify CWP Enhanced Dividend Income ETF with a symbol DIVO, where it invests in the S&P 500 companies, but it garners its income from dividends and option premiums. The manager of the fund is writing call options to drive more income to the fund. And in looking at the holdings, the top one is an ETF made up of other Amplify funds that generate short-term investment cash flow. But the remainder of the companies are the top names that you would expect from S&P 500. I'll dive straight into the performance, where the TTM in the 3-year is fairly low compared to the S&P 500, but I believe a lot of those blue chip companies are undervalued at the moment and they're going to improve later this year. And the dividend is healthy above 4%, but I also want to make it a point to call out the growth on the pricing line, or the price of the ETF has grown every year, which makes this a healthy and sustainable monthly dividend ETF. I'll now move on to the next fund of JP Morgan's Equity Premium Income ETF with the symbol JEPI, or JEPI, where it generates its income from selling options on US large cap stocks. Because it's managing options, it can create a buffer against market volatility, but they can also have a lower return on the overall companies that are in the portfolio. I probably need to make an entire video just on calls and put options so that you fully understand how they're making that extra money. But for now, just know that some of the companies give a dividend in their fund, but the fund managers are also creating revenue with their options trading. And when you look at the holdings, there are a lot of the high growth tech companies where you would expect high returns, at least matching the S&P 500, but that isn't the case. Granted, 2022 was a tough year on tech companies, but this is where there's a trade-off with options trading, where it does generate the dividend at a healthy 8.26%, but the overall growth is slightly stunted. And I do want to remind you that I will be showing all of these ETF on the screen together so you can see how they compare to one another. And I also have the link to my spreadsheet in the description so you can review these and all the different ETF that I used in my research. And in the spreadsheet, it has estimates for what you'd make over the 3 and the 5-year timeframes on a $10,000 investment. It also shows what you'd make if you didn't reinvest the dividend and you just took out the cash. But I'll tell you right now, I did not factor in the taxes. Now on to the next ETF of Wisdom Tree US Quality Dividend Growth Fund with the symbol DGRW. This is a solid fund that invests in large and mid-cap dividend-paying stocks with the likes of Microsoft, J&J, P&G, and Coca-Cola. And when we focus on the performance, the fund is solid at the ETF price level and also at the total return, where the trailing 12 month is over 17%, the 3-year is over 11%, and over 14% at the 5-year mark. And the dividend rate is the lowest of the group, but if you had invested $10,000 into each of these funds that I discussed today, at the end of 5 years, this fund, DGRW, is the best of the group, and true to form, I'm showing you all these ETF as a comparison so you can see how they stack up against one another. But you can save yourself some time and effort, and you can review my spreadsheet for more information, which also has hyperlinks so you can research them all on your own. Now, if you're the type of person looking for the best high growth ETF, then I have it in this video right over here. And if you want to see some of the top ETF across all 11 sectors, I cover it in this video that's on the screen right now too. Thank you so much for watching.